And we're kicked off here. All right.
Alan, tell us the stats.
What's the scoop? The scoop for September here. I think statistics wise, I think I'll actually kind of touch a little bit more on where we potentially can see where the market's going to go based off of inflation rates and interest rates. This coming week on Wednesday, there'll be a policy release for the for just the Bank of Canada overnight rate, which is currently sitting at 4.25%. So I think it'll be interesting to see, where it goes now with some newly released inflation data that Bank of Canada, the inflation is sitting at 1.6%, so below their 2% target. So yeah, it'll be interesting. I read some articles today just talking about where they anticipate things to be, not only come at the end of the week, but also by the end of the year, and that the term oversized rate cut was used. So I don't know what that means, if that'll be up to 50 basis points here this week and then 50 points more in December, but we could be looking at sub 3.5% interest rates here, or overnight policy rates by the end of 24, which lead into some pretty interesting market conditions come springtime. So I see Kev's big smile here, so I'll
I'm
throw
very
it
happy.
over there.
I'm very happy about that. Alberta was going to be hot in the spring, regardless of the cuts, but now it's going to be red hot.
Yeah, no, we look at the trajectory that our market has gone through all year, even before the rate cuts began, and still continue on with some increases on where prices, just the equity gains for investors, but where average selling prices are at compared to the year over year stats from 2023. Looking at rents as well, have been driving on the increasing trajectory, and so for a lot of investors, it's a unique time to be looking at 2024 pricing on pre-construction projects that close next year, which the terms of financing could very well improve through the course of construction. And then for investors or anybody looking to sell, really looking at timing it, because days on market, or sorry, not days on market, but I don't have the exact statistic, but for how many listings there are on the market right now, to my understanding, it's still a seller's market or trending towards that way. And hey, is now a good time for you, or waiting off until the spring when, with that potential interest rate decrease, it'll be pretty competitive. So lots of
Absolutely.
good
Like
things
it's
going on.
really, really exciting times. Like I just had 3 listings go live in the last week. And one of my listings was actually Spencer and Alona both brought me an offer. But it went in full list, or actually over list, over 21K over list, unconditional offer. My other 2 listings are pending right away as well. So it is definitely a seller's market still. I had told Drew last week I thought maybe things were going to settle down a little bit in October, and things will pick up here in the spring, but it seems like that's not the case. It seems like things are really busy right now, and it's not going to stop anytime soon.
Now, have you guys seen sweet spots on the resale side? Just like things that might be a little bit, is it something that has some secondary income generating suites, or just the potential for adding suites now with some new programs coming through CMHC to incentivize that? Have you guys seen a sweet spot in that resale market yet?
I would say still under that $550,000 mark with a suite. Those are moving fairly quickly. Anything that has a little bit of potential to have an increase in value through a renovation, those are super hot right now. To your earlier point, Kellen, the inventory and days on market, or the inventory, we're sitting at 2.7 months of inventory right now, and that is not quite a strong seller's market, but it's definitely edging on a seller's market. A typical seller's market is 0 to 2 months, and then a good balance market will be between the 2 and 4 month mark, and then a buyer's market is anything over 4 months. And we're to Kevin's point, it's things are moving fairly quickly still, and it could could be a mixture of interest rates and the highlight of Edmonton all over podcasts and news articles right now, being the most affordable market in Canada, or one of the largest affordable markets in Canada. Yeah, and mixed with this warm weather that we're still having, people are still out and about, buyers are still out and shopping.
That's not today.
Today's a cold day. I actually
Maybe
wanted
later
to
in the
share some stats from Government of Alberta. They released the statistics last week, and they're basically saying that housing starts decreased by 3.2% month to month in September, and they're down 4.5% from a year ago. And on resale, the resale market declined 2.4% month to month in September again, and it was down 2.9 year to year. But on the complementary to that is that population still keeps growing, and that in the last 12 months in Alberta, we've added over 145,000 international migrants, and we saw a net inflow of almost 44,000 interprovincial migrants. So people are still moving to Alberta. They still need housing, whether it's rental or they're buying. Overall, I think it's good news for Alberta still.
Yeah, I know, it's exciting. I know seasonally, there's some implications on starts as we get to the later parts of the year. They're not going to start as much new construction, so I could definitely see where that might kick off again in the springtime. But yeah, no, like you said, we've been experiencing record levels of that migration and immigration this year, and it doesn't seem like that's slowing down. So the need for housing is continuing on that same trajectory. So I guess on like the new construction side, Chelsea, have you had anybody or like project specific things that you're seeing right now that have had some pretty strong feedback or preferences?
Yeah, I think everybody's still really excited about the market in general here, investment wise, because again, it's still one of the most affordable places. The rents make sense, everything like that. The one thing that you and I actually chatted about that I thought was worth mentioning is with these rates dropping is actually going to be kind of exciting for our investor clients too, because the CMHC MLI Select is kind of what we've been doing mostly for the last few years. And with rates just generally making more sense, there's going to be more products that open up for the investors that are also going to make sense. So there'll hopefully be some more flexibility there, especially with all of the CMHC rules changing. Yeah, we may get that residential side make more sense again, or even other commercial products. So that's what I'm excited about. And I think other investors are, that's warming them up if they were kind of on the fence, especially with the CMHC rule changes and things like that. So.
Yeah, no, that's a good point. We've had plenty of conversations with investors about that, especially just taking advantage of, if we're looking at new construction right now, is getting in on 2024 pricing for projects that will close in 25 when the rates are lower and prices are, there's no expectations or guarantees, but I shouldn't say no expectations, but there's no guarantees. But prices are definitely trending in a way that they'll be higher next year than they are right now. So, yeah, but there's a lot of variables that lead into that. But so we will see what 2025 brings here shortly. Spence, how about you, man? What are you seeing? What are the conversations like? Is there anything specific project-wise or product-wise that investors are interested in talking about?
Well, one of the things I've noticed is that just a fairly significant increase in interest in kind of multiple ways of investing in real estate, right? For the past couple of years, I guess it's been a lot of multifamily through CMHC, MLI Select, that type of thing. Now we are seeing a larger increase in people looking at houses with basement suites again, or buying houses and adding suites and refinancing, all these different kind of vehicles to investing rather than kind of getting pigeonholed because of where the market is. So that's kind of been the biggest change I've seen, is just more avenues, and more opportunities for different people to get into the market, or to make the investments that suit their needs.
Yeah, and I think right now this is prime time for that, because as the rates continue to go down, there'll be an influx of both buyers and sellers, but you're going to get some pretty good deals right now on what's out there. So that'll be very competitive into the springtime.
Well, as interest rates come down, more and more things make sense, right? And we're getting to the point, if things happen as we kind of foresee them happening, it won't be long until really anything will make sense again. So
to that point, Spencer, I've been having a lot more conversations about creative real estate again too, like the agreement for sales in a rising market are really going to start being attractive to people. People want a piece of Edmonton, and sometimes they're not able to get a mortgage for themselves, but agreement for sale and vendor take back mortgages are a way for people to get in on the market while it's going up.
absolutely.
Oh, good point.
What I'm really excited about is just with the new construction side, like obviously everything works, but MLI Select has been such a big driver for us. And those numbers are insane at the current interest rates. So you get in at today's price. So you put something on hold right now. Where interest rates going to be a year from now? We're not even showing on our performas lower interest rates. We're using today's rates, and the numbers really jump off the performa right now. And it's like a no-brainer at today's rates. What's going to happen if we drop that 1%? A year from now, it could be more than 1% down from the number. So you get today's price, tomorrow's interest rate. And I think it's a no-brainer on either doing MLI Select or even conventional commercial financing is going to be an option. And then number three, the way we used to do these multifamily deals was doing multiple residential mortgages. So we have three really good, amazing options right now that I think are going to make this a no-brainer. And I think that out of all the stuff, like, yes, I like the single family homes and all the different options are going to be unique and workable, but still the bread and butter, the best financing in the world is at MLI Select financing. And if I was an investor looking right now and I can make one of those deals work, I would buy as many as I can right now, because by spring, you've probably seen a big lift in price right off the hop.
Yeah, no. So after, getting some good insights about what's going on in maybe the mind of the buying side for sellers right now, as you're kind of navigating those conversations, Kev, you mentioned you had 3 listings go live, but from a seller's perspective, what does that look like? I guess is it a great time to start getting the listings going, or are we kind of waiting to see where the shoe falls here?
Yeah, so that's a situational thing. So my clients that are selling right now, some are looking to buy new properties and they want to get into it right now. So they're offloading some of their single family stuff and they want to get into some more multifamily stuff. But right now, the good thing is you have less competition, less people list in the fall, winter time. But the buyers haven't really disappeared. So you have more competition. Like I said, my last listing, I got offers from Spencer and Alona and a whole bunch of other agents. I think we had 8 offers over the weekend and we went over 21K over list price unconditional. So deal's done. But if you're not in a rush, I would say that sometime early next year, as we really feel the effects of the interest rate drops, usually it takes about 6 months, 3 to 6 months before people really start to see those benefits. I think a lot of those buyers that said when the interest rates went up, they were like, you know what, I'm waiting this out. These rates are too high. I'm going to wait this out. Well, guess what? It's finally that time. It's time for them to enjoy the benefits of them waiting. They're going to see those lower interest rates. Now, the downside, I would say, is that prices are likely going to go up. So yeah, they're going to have a lower interest rate, but the prices are actually much higher than they were a year or two ago. But I think if I was talking to a seller and they're not in a rush to sell, I'd probably recommend sometime early spring, like February, to talk to us, and we'll start the plan to get your place sold for the top dollar and really maximize value. But if you're leaning towards selling sooner, right now is a great time still. Like there's really no bad time. You're going to have less competition. The showings that are actually happening on your properties. If someone's looking for a home when it's cold outside, they're dead serious. So I'm really excited about that. I'm not sure what your guys' thoughts are on that or what you guys have been seeing, but that's kind of my input on that.
I agree with you 100%, Kev. I'm having lots of conversations with people asking if now is a good time to sell, and I point them towards those same questions. Is there a reason why you need to sell right now? Again, with the less competition, it may go quicker than it would in the spring, or sorry, than it has been all year. But if you don't need to sell right now, then wait it out till the spring. I've had lots of conversations with people that are holding off till spring 2025.
And that's great value, right? Most realtors will tell you to sell right away. Like any realtor that you're usually talking to is like, sell, sell, sell. But we're telling you don't sell. If your investment's working and you can take a little bit of time, we do think there's some growth and some lift available over the next few months. So if you're not in a rush, definitely let's chat in February or end of Jan and start making a plan for you on how we can sell these early next year.
How about from an investor standpoint as well? Because that would be, I think a good time to maybe revisit the performance of the properties to see, when leases have expired, what the timelines look like, what the financing looks like, because this could also be a really good time to just do a deep dive review on the accounting side, taking a look at the property management, ensuring that market rents are attractive. But then I guess where I'd want to ask the question is, what would you recommend for an investor? Are you seeing benefits to having listings where properties are fully tenanted? Or are you looking at something like maybe you should look at timing the listing of your property with a lease expiring? Is there any strategies there?
It really depends on the property itself and if it's in the cash flow zone or not right now. So I've had a number of conversations with sellers who are investors, and maybe their leases are going out till spring or summer of 2025. And I say, okay, let's take a look at if a new buyer were to come in and get financing today. Let's look at the comparables. Let's look at what price you could sell it for. Does it cash flow with today's lending climate? And if it doesn't, then we should wait it out because spring, rents are going to go up in the next few months here or the next number of months, and prices are going to go up, and you can get closer to the end of your lease maturities, and then we can maybe increase the amount of buyers by promoting it and marketing it to homeowners as well. If it's like a purpose-built rental, then we got to take a look at what we can do to get that NOI up, what we can do to get the rents up, and then make it more marketable that way.
Mm-hmm.
And just to add to that, from an asset management perspective, I think investors should be watching their expenses. Now that we're moving into winter months, utilities are going to go up, the consumption. Make sure that you're minimizing your expenses as much as you can. Talk to your property managers, ensure that utilities are written, or you have like an utility agreement with the tenants if they're going over a specific amount of utilities used, that they are the ones who are paying for that utility overage. Make sure you track all of that. Insurance, that's how you minimize expenses and maximize income on the property.
Yeah, I really like your original question, Kellen. There are a lot of ways, a lot of reasons why people want to sell, and sometimes it's the numbers don't work, but there's been so much change recently that they should be looking at the mortgage broker and say, hey, what if we change the financing? Maybe this property starts working and they don't need to sell. Our opinion is always, we'd love you to keep the property if it works. And if it doesn't work, we'll sell it for you. And I think the property management side is a big part of it too. If you can get market rents and update, maybe you're comfortable with your tenants and you haven't changed rents in a while and things are just status quo. But if the property's not performing, it's not working, maybe just getting market rents and improving the financing situation makes you much happier with the property. You don't need to sell. So there's a lot of different variables there.
Well, that's what a unique offering for our team specifically. And like you said, most real estate agents or groups would be looking to just sell when somebody asks if they should sell or not, where we can help strategize, take a look at the big picture of performance. And maybe the best bet is to hold on to that asset for longer. So yeah, that's just a unique trait. I think that our team and everybody feels passionate about and providing that additional support, not just looking to sell. So no, it's good feedback. Thank you. Closing remarks. Who's got the predictors going? Who's got the crystal ball? What rate are we going with on Wednesday? And why is it 3.75%?
Oh, it's going down 0.5.
You think so?
Agreed.
Seismic, oversized.
You know, I know I did a lot of research on the interest rates and whatnot, and the Bank of Canada was really, really waiting on the Americans to drop their rate because if we get too out of whack with them, it does have some major downsides. Soon as the Americans dropped and they said more drops are coming, now the Bank of Canada can freely do their thing, and then you throw in us being under the inflation target. They got to be careful. They're going to try and stimulate the economy to avoid, you know, a recession or anything like that. So I think they're going to be extremely aggressive, and I'm not 100% sure if it's going to be a full percent by the end of the year, but I think it, you know, 0.75 is very, very realistic. And if it's 1%, party at my house.
You're all invited.
Bye, guys. Have a great
All right,
day.
bye, everyone.
Have a great day.
Bye bye.
Yeah.